Target reporting first quarter earnings. Below expectations, Target is calling 2018 a transition year for the retail giant. The first quarter earnings and revenue under pressure, and the stock is down 3.25% right now. Strategic Resource Group Managing Director Burt Flickinger is with us right now. Burt, it's good to see you. Thanks so much for joining us.
Thank you, Maria.
Your characterization of retail right now, how do you see it?
Accelerating retail ice age, Maria. And even with that, Target should be winning. Its problems are all internal. Management mistakes. There have been in transition for 4 years. Time to turn it around, right for activism right now.
Well, look, Target is calling 2018 a transition year. It is adjusting to address customer evolving shopping habits, it says. The plan largely centered around improving the digital experience, launching more exclusive brands, remodeling existing stores, opening small format locations. This is not enough.
Not enough, Maria. And to us, Target's a McKinsey co-monarchy, outsourcing just about everything. Unlike Walmart, unlike Kroger, Costco, Winco, they don't control their own distribution. So of all the retailers we follow from New Zealand and Nova Scotia, worst out of stocks we've ever seen, especially on weekends when they're doing 65% of their business from Friday to Sunday. The executives need to go from their wealthy suburbs, Wayzata, et cetera, around Minneapolis and start getting into stores unannounced and see how bad their IMS and inventory management system is, and get the shareholders some value. Revenue would be up, shopper experience would be better, and apparel's getting weaker, and Walmart's winning on apparel for the first time in its 55-year history.
Calling it a transitional year is like blaming the weather for bad sales. It is classic retail PR hogwash. Because this company has been struggling literally ever since that data breach at its point of sale.
Dagan's raising a really prescient point. First, it was the data breach. Then it was Canada, just the epitome of institutional ineptitude. And now it's everything but the management making a lot of mistakes with McKinsey and other outside companies, where I was with the fastest growing retailer in the world a couple days ago. They said if McKinsey or similar consultants came out, either the consulting firm would be thrown out or the person from the company would be thrown out. So the people with the great leaders, Maria, the people you've interviewed, Ken Langone, Bernie Marcus, Arthur Blank, Frank Blake from Home Depot, they're constant winners. And the retailers that outsource are the perennial losers.
Well, I think the interesting aspect here, though, is their locations, because we're seeing that Amazon has moved into Kohl's because of the location, right? And you can do Amazon returns. We're going to talk about that. But I think there could be an era where Target actually does turn it around if they do figure out their digital, because that's what's happening with Walmart, right? We've seen Walmart rebound because of that. And I'm looking at their statement now. They're reaffirming their full-year guidance here on Target. Their same-store sales were actually up and beat expectations. Yeah. So, what do they need to do to actually turn that corner that you're referring to?
You're right. They're doing a lot of good things. They're advertising and marketing people, some of the best in the business. Store design, same thing. But in outsourcing, they outsourced Target.com fulfillment to Amazon for 7 years. Amazon went to school on Target, take some of those learnings, as you guys are referencing, to Kohl's. So you're right, getting digital fixed, getting the in-store experience fixed, and they're doing a sensational job with beauty, which is increasing customer counts and driving same-store traffic at the same time.
Burt, when you look at all the disruption coming from e-commerce in general, not just Amazon, is there a merchandising issue, though, inside of these stores where they're just selling the wrong things because some of it's just totally being disrupted by e-commerce?
They're selling some of the wrong things, but Target's migrated more to private label, where Kohl's had very positive same-store comps yesterday. Best combination of own brands and national and global brands. Hal Lawton, Jeff Gannett at Macy's, Tony Spring at Macy's Bloomingdale's are doing the same thing. Helena Folks at Saks with Richard Baker, same thing. The best prestige brands with private label, and Target's way too far on private label, and that's why Walmart's winning in apparel is on the branded side, not the private branded side.